हेलो गाइस, वेलकम बैक टू आदित्य फाइनेंशियल इंसाइट। तो गाइस आज चैप्टर नंबर 7 का, जिसमें कि इंट्रोडक्शन ऑफ क्लियरिंग एंड सेटलमेंट सिस्टम का हम लेक्चर नंबर 2 यानी पार्ट 2 हम शुरुआत करने जा रहे हैं रिस्क मैनेजमेंट से। तो गाइस रिस्क मैनेजमेंट सबसे पहले देखते हैं रिस्क मैनेजमेंट में क्या क्या चीज़ हम लोग पढ़ना है, क्या क्या जानना है आपके इक्विटी इन्वेस्टमेंट कैरियर में या क्रिप्टो मार्केट के कैरियर में कैसे कर सकते हैं या कैरियर स्मूथली आपके ग्रोथ हो। तो भाई इसमें हम रिस्क मैनेजमेंट से शुरुआत करते हैं। सबसे पहले जैसे कि देख लेते हैं, एक्सचेंज विद द हेल्प ऑफ क्लियरिंग कॉर्पोरेशन मैनेज द रिस्क इन द डेरिवेटिव सेगमेंट यूजिंग comprehensive risk contaminant mechanism. The silent feature of risk contaminant measure in the FO segment. Strength requirement of capital adequacy of membership, financial strength of a member help in risk management. Clearing corporation charge an upfront initial margin for all open position of a clearing member. It specifies the initial margin requirement for each future and option contract on daily basis and also follow value at risk based margin. Clearing member collects initial margin for the trading members and their respective client. The open position of the member the open position of the member are settled on member member trading member basis on each contract at the end of the day. Clearing Corporation's online position monitoring system monitors clearing members' open position on real-time basis. It sets limit for each clearing member based on his effective deposits and simultaneously generates alert message whenever a clearing member reaches certain predetermined benchmark of the limits. Clearing corporation monitor the clearing member for the initial margin violation, exposure margin violation, while the trading member are monitored for the initial margin violation and position limit violation. A trading terminal helps the clearing member to monitor open position of all trading member clearing settlement through him. A clearing member may set limits for the trading member clearing and settling through him. Clearing corporation assets the CM clearing member to monitor the intraday limit sets up by the CM, and whenever trading member exceeds the limit it stops the particular trading member from the further trading. The most critical component of risk containment mechanism for the future and option segment is the margin system and online positioning monitoring. The actual position monitoring and the margin is carried out online using a standard portfolio analysis of risk system for the purpose of computation of online margin based on the parameter defined by the regulator. Margin mark to mark under span. In order to manage risk efficiently in the Indian security market, exchange have adopted a standard portfolio analysis of risk, a risk management and margin product designed by Chicago Merchant Exchange, Chicago, USA. The software was developed for calculating initial margin on the various positions of the market participants. The objective of SPAN is to identify overall potential risk in portfolio. The program treats further an option uniformly while recognizing the unique exposure associated with the option portfolio. Since SPAN is used to determine initial margin on various positions, its basic objective is to determine the largest possible loss that a portfolio might reasonably expected to suffer from the one day to the next. It then sets initial margin at a level which is sufficient to cover on-day potential loss. The concept of risk area represents the extent to which a specific derivative instrument will gain or lose value from present time and a specific point in the time in the near future. Over a specific set of market conditions, the time is set to the on trading day through the use of spans maximum likely loss, which may reasonably occur over the trading day in being evaluated. Margins. The margin system for the equity and derivative segment is as follows. The initial margin index guys. Margin are computed by the clearing corporation up to client level with the help of a spawn. Clearing corporation collects the initial margin for all the open position of a clearing member based on the margin computed. Margins are required to be paid upfront on gross basis at the individual client level for the client position and on net basis of proprietary position. A clearing member collects initial margin from trading member whereas a trading member collects from his client. Initial margin requirements are based on 99% value at risk over a 1 day time horizon. However, हालांकि in the case of future contract index of individual security, where it may or not be possible to collect mark-to-market settlement value before the commencement for the trading next day, the initial margin is computed over a 2 day time horizon applying to approximate a statistical formula. The methodology for computation of value at risk percentage is as per the recommendation of SEBI from time to time. Premium margin along with initial margin, premium margin is also charged at the client level. Premium margin includes premium amount due to paid to clearing corporation towards premium settlement at the client level. Premium margin is levied till the completion of play in towards premium settlement. Assignment margin for the option on security. Along with initial margin, premium margin, assignment margin is required to be paid on assigned position of clearing member towards final exercise settlement obligation of option contract on individual security till such obligation are fulfilled. Assignment margin is levied on assigned position of the clearing member toward the final exercise. Settlement obligation for the option contract on index and individual security which are settled in cash. Assignment margin is the net exercise settlement value payable by a clearing member toward the exercise settlement. It is level till the completion of a pay in toward the exercise settlement. Intraday crystallized loss. Clearing corporation calculate and devise intraday crystallized loss in the following manner. Intraday crystallized member trading member is computed for all trade which are executed and result into closing out of open position. Intraday closing market to market calculated based on weighted average price trade and position. Intra calculated market to market is computed only for future contract. Intra-contracted market to market is a part of initial margin. It is adjusted against the liquid asset of clearing member on the real-time basis. Crystallized losses at the contract level of client are adjusted against crystallized profit, if any, from another contract for the same client to arrive at a client level profit or loss. All client level loss across all the trading member including loss on proprietary position of the trading member, if any, grows up arrive at clearing member level. Intraday crystallized market to market. Intraday crystallized market to market, so block collected is released on completion of the final mark to market settlement paying. डिलीवरी मार्जिन में हम आ जाते हैं गाइस. डिलीवरी मार्जिन आर levied on the lower of potential delivered position on in the money long option position for 4 day prior to expiry of derivative contract which are required to be settled through delivery. Example, if expiry of derivative contract on Thursday, the delivery margin on potential in the money long position become applicable from the UOD previous Friday. Delivery margin are part of the initial margin of the clearing member and computed at the client level settlement obligation of all positions to be settled through the delivery. Client level potential in the money long position are computed on daily basis. In the money, options are identified based on the closing price on the security in the underlying capital market segment. On the respective day, delivery margin are Levi at the client level and collected from clearing member in a staggered manner as under 20% of delivery margin. Computer and expiry for EOD. 40% of delivery margin computer expiry 3 EOD. 60% delivery margin computer expiry 2 EOD. 80% delivery margin computer 1 EOD. तो गाइस 80% देख सकते हैं आपको एक दिन बाकी रहेगा तब आपको करना होता है। 60% अगर डिलीवरी मार्जिन है तो सेकेंड ईओडी होता है एंड 40% 20%। The position which are converted to settlement by delivery after the expiry date become subjected to rely on margin as applicable capital market segment. Extreme loss margin and mark to market margin. Delivery margin block are released on the completed। देखते हैं एक्सपोजर में आ जाते हैं। एक्सपोजर मार्जिन में देख सकते हैं the VAR in extreme loss percentage as computed in the capital market segment are applied under client level settlement obligation. The margin rate is updated for every change in margin rate in capital market segment. Clearing members are subjected to exposure margin in addition to initial margin. Short option minimum charge। शॉर्ट ऑप्शन मिनिमम चार्ज में देखते हैं गाइस क्या है। Short option minimum charge was a margin to cover risk associated with the short option position in extremely deep out the money strikes. SEBI has recently done away with the concept of short option minimum charge via its circular dated February 24, 2020. Hence, this concept is not discussed further. Net option value. Net option value देख सकते हैं। Net option value is computed as the difference between long position and the short position, valued at the level last available closing price of the option contract and the update intraday at the current market value of the relevant option contract at time generation of risk parameter. The net option value is added to the liquid net worth of the clearing member. Thus, marks to market gain and losses are not settled in case for option position. Client margin reporting. Clearing corporation inform all members of the margin liability of each their client. Additionally, members are required to report details of margin collected from client to clearing corporation, which holds trust client margin monies to the extreme reported by the member as having collected from their respective client. Any non-collection or short collection of margin by member from their client is penalized by the exchange. A broker client often deposits security with the broker by way to margin of their position. There is a risk that the broker may misappropriate client security and use this to fund margin obligation on his proprietary position or that of some of the other clients. To mitigate this risk, it is now mandatory for brokers to accept collateral from client in the form of security only by way of margin pledge created in the depository system. The broker is required to open separate demat account for accepting such margin pledge term as client security margin pledge account. The broker must ensure that the client security repledged to the clearing corporation are available to give exposure limit to the client only. Recently, the broker have been asked to report disaggregated information on the collateral collected by the at the client level. The trading member are required to report this information to their clearing member, while the clearing member must report this to the exchange and clearing corporation. Similarly, a stock exchange clearing corporation have been asked to provide a web portal to allow clients to view the collateral report by the member। तो देख सकते हैं पीक मार्जिन ऑब्लिगेशन क्या है गाइस। पीक मार्जिन ऑब्लिगेशन हम देखते हैं। SEBI introduced significant changes to the framework for the upfront collection of margin from the client in cash and derivative segment via its circular dated 20 July 2020. Till recently, client margin reportedly was broken by on end of the day basis. As a result, many brokers allowed clients to maintain lower margin on intraday position. For example, suppose the initial margin and exposure margin required to client end of the day derivative position is 1 lakh. However, it's quite possible that the client had taken several other positions during the day and a square of this position end of the day the margin required of position could be much higher than the UD margin 1 lakh. Let's us say that broker allowed the client to maintain margin just 30,000 throughout the day. This amount to excessively intraday leverage being allowed to the client. Such leverage can lead to large loss on the day, high volatility. To further strengthen risk management by a broker, SEBI introduced the concept of peak margin computation through its circular dated July 2020. As per the new regulation, clearing corporations are required to send a minimum for a snapshot of client-wise margin requirement to TM trading member and clearing member to enable them to know the intraday margin requirement per client each segment. The member must report the margin collected from each client end of the day peak margin collected during the day in the following manner. End of the day margin obligation of the client is compared with the respective client margin available with the trading member and clearing member at the end of the day, and the peak margin obligation of the client across the snapshot is compared with the respective client peak margin available with the trading member and clearing member during the day. The broker had to pay penalty on any shortfall collected of margin which is higher of A and B. The peak margin obligation regulation were to be implemented a phased manner to enable broker and their client to adopt new framework. However, considering representation received from the market participants and after deliberation with the various stakeholders, SEBI clarified through the circular dated 10 May that the margin requirement of the consider for the intraday snapshot derivative segment, including commodity derivative, would be calculated based on the fixed beginning of the day margin parameter. Beginning of the day margin parameter could be include all spend margin parameter as well as the in limited requirement. It was later decided according with the circular issued on February 1, 2023 that the end of the day margin collection requirement for client in the derivative segment, including commodity derivative, would also be calculated based on the fixed BOD margin parameter. SEBI clarified that these changes were only the purpose of verification of the upfront collection margin from the client. The margin parameter applicable for the collection of margin obligation by the clearing corporation would continue to update it on the intraday end of the day basis as per the existing regulation. For example, को थोड़ा गाइस हम समझते हैं. Let's suppose you are trading a bank nifty weekly option and based on the beginning day margin requirement, you need to 10,000 trade. So you deposit 11,000 in your trading account and it is a good trade, but due to market fluctuation and volatility, the margin requirement is 12,000, but you have only 11,000 cash in your trading account. So depending upon the time snapshot by the clearing corporation, your position, you would have been charged short margin penalty as per the SEBI clearing peak margin rule. But starting 1 August 2022, this penalty would not be charged as of now beginning of the day of margin 10,000 as per the above example. Requirement will be applicable throughout the day trading session. This can help market participants to calculate their position better, deploying just enough capital to execute their trade and better manage their capital. क्रॉस मार्जिन हम देखते हैं. क्रॉस मार्जिन क्या है? Silent feature of the cross margin available on the exchange as follow. Cross margin is available across the cross derivative segment. Cross margining is available to collect all category of market participants. The position of the client in both capital market and derivative segment to the extent they offset each other only are considered for purpose of the cross margin. When a clearing member when a clearing member clear of client entities in cash and derivative segment, he, he is then required to intimate client details through the collateral interference for the member to benefit from the cross member. When a different clearing member clears of client entities in cash and derivative segment, they are required to enter necessary segment of available Cross margin benefit. Client who wish to available cross margin benefit in respect to position in index future and consistent stock future only. Their clearing member in the derivative segment need to provide their details on the client. Yearly pay in security and fund. In case where yearly pay in the security is made by the members, such position for which yearly pay security is made shall be exempted from the delivery margin. Clearing member can make the yearly pay in security to the depositor NSDL, CDSL, NSDL clearing member shall deliver security to their pool account and execute irreversible delivery of instruction through their depository participants of the particular settlement. In CDSL, clearing the member can transfer the security to their yearly pay-in account CDSL capital market segment with a clearing corporation. Clearing member can provide the details of the client to whom yearly pay in benefit to provide rough file upload in case where the yearly pay of fund is must made date. Such position shall be exempted from the delivery margin. Mechanism of pledge and repledge of the client security. इसका राइट जो भी मैकेनिज्म काम करता है प्लेज रिप्लेज क्लाइंट सिक्योरिटी में उस पर हम देखते हैं. In the past, client would provide power of attorney to a broker to enable broker transfer security from the client demat account to the collateral account for the purpose of meeting client margin obligation. There have been instances when broker have misused the power of attorney derivative one's client security to meet the margin obligation another client or that of the broker proprietary position for funding another business of the broker. In other cases, dividend on shares held by inactive client have misappropriated by the some broker to curb the misappropriate or division client security by the brokerage. SEBI introduced a new pledge replace mechanism which came into effect of September 2020. Under the new regime, client can provide collateral for margin purpose only through a margin pledge and not simply by executing a power of attorney for favor their broker. The new regime required depository to provide separate pledge by the margin pledge for pledging client security as a margin to trading member clearing must open a separate demat account for accepting the margin pledging the client. This demat account is targeted as a client security margin pledge account. A client who wishes to provide collateral to his broker of margin obligation may pledge security under margin pledge facility of depository. Trading member can repledge this security to the trading member only when the client security margin pledge account of the trading member. The trading member can replace such security to the clearing corporation. This mechanism ensures that the complete trial for such repledge is reflected in the demat account of the pledgers. Since the security is only pledged to trading member on there no transfer of the title from the client to the trading member. The risk misappropriation of the security by the trading member and clearing member mitigated. Also, the new mechanism requires trading member clearing member to ensure the client security that replace the clearing member corporation are used to meet the margin obligation of the client only. Segregation and monitoring collateral client at the client level. Segregation and monitoring of the collateral at the client level. SEBI has introduced new reporting mechanism by the trading member and clearing member of cash and non-cash collateral provided by their client. The purpose of this reporting is provide to clear visibility of the client wide collateral at all levels. Accordingly to trading member are required to report to their trading member disaggregated information on the collateral received by the trading member at the client level. Thus, the trading member has to report following to the clearing member: client collateral received from individual client and client collateral retained by the trading member. Client collateral pledged by the trading member with the CM clearing member and clearing member are in the turn required to report clearing corporation disaggregated information on the collateral at the client level of the trading member. Proprietary collateral of the trading member. Thus, clearing member are required to report following to the trading member. Client collateral received by the trading member from the individual client. Client collateral retained by the trading member. Client collateral placed by the trading member with the client collateral retained by the client clearing member and client collateral placed by the clearing member with the clearing corporation. This report is required on the daily basis. The purpose of the new reporting mechanism to ensure the clearing corporation has clear visibility of the client-wide collateral at the various. तो जैसे टेंशन रहा है पोजीशन लिमिट में क्या क्या पढ़ना the position limits are the important part of the risk management framework of derivatives exchange. A position limit on the derivatives exchange is a restriction on the ownership that limits the number of derivative contracts that trading member or client acting individual together with the others can own. Position limits are intended to prevent trader from the manipulating price by accumulating control over the market or individual or stocks through the derivative contract. SEBI has laid down three types of position limit in the equity derivative segment in India. These are client level position, limited trading member wise position, limited market wide position. There are rules regarding the computation and monitoring of these different position limits as follows. Client level position, future and option contract on individual security. The gross open position across all derivative contracts for the security for each specific client shall not exceed higher of 1% of the free float market capitalization in the term of number of shares or 5% of the open interest in all derivative contracts in the same underlying stock or exchange in the term of number of shares. Client level position limits security wise are made available to member on the exchange website. Any person or person acting in concert who together own 15% more of the open interest on a particular underlying index is required to report this fact to exchange clearing corporation. Failure to do so shall be treated as violation and shall attract appropriate penal and disciplinary action according with the rules and regulation in clearing corporation. Trading member wise position limit. Trading member wise position limit देखते हैं गाइस. Index future. The trading member position limit in index future contracts shall be higher 75,000 crores, 50% of the total open interest in the market equity index future contract. This limit would be applicable on the open position in all future contract and particular underlying index. Index option क्या है? Index option में देखते हैं the trading member position limits in equity index option contract shall be higher 7,500 crores or 15% of the total open interest in the market in equity index of the contract. This limit would be applicable on the open position in all option contract on a particular underlying index. Individual securities the combined future and option position limit shall be 20% of applicable market wide position limit per exchange. The clearing corporation shall specify trading member wise position limit on the last trading day of the month, which shall be recounted of the purpose during the next month. मार्केट वाइड पोजीशन क्या है? मार्केट वाइड पोजीशन में देखते हैं गाइस. मार्केट वाइड पोजीशन for the further future and option contract of individual securities shall be 20% of the number of shares held by non-promoters relevant and underlying security 20% of the free float in the term of number of shares of a company. The clearing corporation shall specify market-wide position on the last trading day of the month, which shall be reckoned for this purpose during the next month. Trading system display an alert once open interest in the future and option contract in particular security exceeds 60% of the market-wide position limit specified for the such security. The aggregate open interest of the security across exchange shall be considered for the purpose of monitoring market-wide position limit. If the aggregate open interest of the security across exchange exceeds 95% of the market-wide position, no fresh position shall be permitted for the said security from the subsequent trading day. The normal trading in securities shall be resumed only after aggregator opening outstanding position across exchange comes down 80% below of the market-wide position. Apart from the above, additional position limits may be applicable to foreign portfolio investors, mutual fund, non-residential individuals, as specified in SEBI Circular IMD, FPI, and ICIR, dated of number 5, 2019 in the SEBI FPI Regulation 2019. Position limits for the index future index option. Pan level position limits for index option, particular position limit. Net end of the day future equity option index 500 1500 crore and gross equity open index 10,000 crore. Position limits for इंडेक्स फ्यूचर मेजर क्रॉस नेशनल बेसिस इसमें देख सकते हैं पार्टिकुलर है पोजिशनल लिमिट क्या है एफपीआई कैटेगरी म्यूचुअल फंड ट्रेडिंग नंबर क्लाइंट हायर 15% इंडेक्स फ्यूचर ओपन इंटरेस्ट 500 करोड़ वह एफपीआई कैटेगरी में अदर इंडिविजुअल फैमिली ऑफिसर 10% आप कर सकते हैं इंडेक्स से फ्यूचर ओपन इंटरेस्ट 500 करोड़ एंड एफपीआई कैटेगरी सेकेंड इंडिविजुअल फैमिली ऑफिस एंड कॉर्पोरेशन 5% अब इंडेक्स इंडेक्स फ्यूचर सबकी लिमिट होती है गाइस जो भी बड़े बड़े सेगमेंट होते हैं इसमें डायनेमिक चेंजिंग ओपन इंटरेस्ट एंड पोजीशन लिमिट. Position limits are based on the total open interest of the market at the end of previous day trade. If open interest drop compared to the previous day, market participant can reach the position limit. A stock exchange will provide a facility for the monitoring future equity open interest till December 5, 2025. Post which broker entity expected to have their own delta computing monitoring system. You may have SEBI Circular 9 for more details. Intraday monitoring position limits क्या है? In addition to end of the day monitoring mechanism as stated above, the position limits for the equity index derivative contract would also monitor on an intraday basis for the April 1, 2025. For this purpose, a stock exchange shall consider minimum 4 position snapshots during the day. The number of snapshots may be decided by the respective stock exchange subjected to minimum 4 snapshots in a day. The snapshots would be randomly taken during the predefined time window. When the client level position limited are exceeded, clearing member, trading member must ensure that the client does not take any fresh position and existing position must be reduced within the permissible limits. This exchange collects penalty from the clearing member. Such violation and clearing member can recover the same. The trading member client violation, the position limit, trading member limited violation monitored throughout the day. In case of violation, the trading member is not allowed to increase his open position. The security index which position is exceeded. Monitoring watching violation checked by the exchange at the end of every trading day. At the end of each day during which ban on fresh position enforced by any stock when any member or client has increased his existing position, has created new position that the skip client trading member are charged a penalty. The penalty is recovered from the clearing member affiliated with such trading member client T+1 day basis along with the pay. Violation and penalty क्या है? Violation and penalty में आप देखते हैं non-compliance of any previous provision of the rule by law and regulation by any clearing member or trading member is treated as a violation and attract appropriate action which include penalty following as some of the compliance lapse with attack such penal charge. No fulfillment of initial margin obligation, non-fulfillment of settlement obligation, non-fulfillment of security and delivery obligation, non-fulfillment of minimum deposition requirement, exposure margin violation, positional limit violation, misutilization of trading member, constituent client collateral deposition, violation of exercise position, short or non-reporting client member, market-wide position violation. In the event of a violation, clearing corporation may advise the exchange to the withdraw any all of the members right clearing member including the withdrawal of the trading facility of all trading member and clearing facility of custodial participants clearing through such clearing member without any notice. In addition, outstanding position of such clearing member and trading member clearing and settlement through the such clearing member may be closed out. Such action shall be final and binding on the clearing member and trading member. Clearing corporation can also take additional measure like imposing penalty, collecting appropriate deposition, invoking bank guarantee, fixed deposition receipt, realizing money by the depositing of the security etc. A certain settlement of running account, client फंड लाइन ट्रेडिंग मेंबर तो देख सकते हैं अगर इसमें देखते हैं आगे कितना है तभी तो देखते हैं सेटलमेंट ऑफ द running account of client funding lying with a trading member with a view of prevent any misuse of the client fund by the broker. SEBI has made it mandatory for a broker to settle running account for a client fund on a monthly or quarterly basis as per the mandate on client. The trading member, after consider end of the day obligation of the fund across all exchanges shall settle during the account at the choice of the client on quarterly or monthly basis on the stipulated of the stock exchange to ensure uniformity and clarity on the date of such monthly and quarterly settlement of the client account. A stock exchange shall jointly issue the annual calendar of the settlement of the running account quarterly monthly at the beginning of the financial year. For the client have credit balance who have do not any transaction in 30 calendar days since the last transaction line with the member for more than 30 calendar day entirely credit balance client shall return to the client trading member on the upcoming settlement date. A monthly running account settlement cycle is effective of the settlement cycle preferred by client as stipulated by the stock exchange. However, if the client trade after 30 calendar days before a foreseen upcoming settlement date, monthly running account settlement cycle and settlement of the account of the client shall continue to the done by the trading member as per the preference of the quarterly, monthly indicate by the client for the running account settlement. Settlement guarantee fund and investor protected fund. Settlement guarantee fund and investor protected fund. Carrying corporations are required to have placed a core settlement guarantee fund. The primary objective to core settlement guarantee fund is to have fund of each segment for the cash, future option, and CD. Guarantee settlement of the trade is executed in respective segment of the stock exchange. In the event of clearing member failing to honor settlement commitment of core SGF EU to fund obligation of that member and complete settlement without affecting the normal settlement process. Exchange have established an investor protection fund with the objective of compensating investors in the event defaulting member asset not being sufficient to meet the admit claims of the investor. The other objective of the fund include promoting investor education, awareness, research. The Investor Protection Fund is administered by the way of registered trust created for the purpose. Recent measure adopted by the SEBI to strengthen equity index derivative framework to ensure investor protection market stability. These measures including following upfront collection option premium. Starting February 1, 2025, trading member must collect the entire premium upfront from the option buyer to limit undue leverage and mitigate risk. Removal of calendar spread benefit of expiry date. Effective from 1 February 2025, contract expiry on the same day will no longer receive margin offset to address basis risk and speculation violation. Intraday monitoring position limit. From April 2025, exchange must monitor position limits intraday with at least 4 random snapshots per day. Revision of index derivative contract size. November 2024, the minimum contract size new index derivative will be increased reflect Market value 15 to 20 lakh. Rationalized weekly index derivative effective November 20, 2024. Each exchange may only offer weekly expiry derivative on benchmark index. Additional tail risk coverage on expiry day from November 2024 and additional 2% extra loss margin will apply for short option on expiry day account of originated speculative activity. This measure aims to reduce excessive speculation, improve risk management, and align the framework with evolving market dynamics. Cybersecurity The cybersecurity cyber resilience framework from the stockbroker and depository participant. Rapid technology development in security market highlighted the need for the maintaining a robust cybersecurity and cyber resilience framework to protect the integrity of the data and guard it against the breaches of the privacy. Since the stockbroker and depository participants perform significant function in providing service to the holder of security, these entities should be robust cyber security and cyber resilience framework. This shall be provided for essential facility and perform systematically critical function relating to security market. Cybersecurity framework include major tools and processes that are intended to prevent cyber attack and improve cyber resilience. SEBI recently notified a detailed CRF for the SEBI regulation entities that shall come into effect in phased manner starting from January 1, 2025 onwards, as superseding existing circular. The key objective of CSCR is to address evolving cyber threats to align with the industry standard to encourage efficient audit to ensure compliance by the SEBI regulation entity as per the CSCR following research constituted as the market's infrastructure institution, stock exchange, depository, clearing corporation, KYC registration agency, qualified registration transfer. Cyber resilience is an organized ability to prepare, respond to cyber attack, to continue operating during the recovery from a cyber attack. Cyber security, cyber resilience framework based on five cyber recycling goals. क्या है? Anticipate, maintain a state of information precedence from the adverse attack, withstand, continue essential business function at the time of adverse attack, contain, in the event of cyber attack, localize contaminants of a crisis and isolate trusted function from the untrusted ones, continue business operation, recovery, restore business function to maximum extent subsequent to the adversely attack, evolve, to change business function and its supporting cyber capability to minimize adverse impact of a adversely attack actually to prediction. The sample देख सकते हैं prescription का a trader a want to sell 20 contract operator is 4500 and trader B want to sell 720 17 contract of September series 4550 loss 550. Both these contract initially margin fixed 6%. How much will initially margin required to collecting for the both these investor such initial margin? तो दोनों का 6% निकाल सकते हैं गाइस, उसके बाद आप कलेक्ट कर लीजिएगा। तो देख सकते हैं 5 lakh 2050. A member of the client to client C1 and C2. C1 has purchased 800 contacts. C2 has sold 900 contacts. And August XYZ future series. What is the outstanding liability when पोजीशन मेंबर टुवार्ड द क्लियरिंग कॉर्पोरेशन? तो देख सकते हैं तो दोनों को जोड़ दीजिएगा तो आपका टोटल हो जाएगा 1700। तो क्लियरिंग आपको इतना ही होगा। Client position cannot be netted off against each other by calculating initial margin in the derivative segment. सही है। Market to market margin are collected by on the weekly basis every 2 days on which on the daily basis. Market to market margin are collected on the daily basis. ठीक है। Value at risk measure by valuation property portfolio, risk level of financial portfolio, net worth of investor and credit rating of investor, risk level of financial portfolio. So guys, ये चैप्टर समाप्त हुआ। अब नेक्स्ट लेक्चर वीडियो में हम शुरुआत करेंगे लीगल एंड रेगुलेटरी इन्वॉल्वमेंट। थैंक यू भाई। इसी तरह चैनल से बड़े हैं और इक्विटी डेरिवेटिव सर्टिफिकेशन एग्जामिनेशन में हम आपको 7 चैप्टर पढ़ा चुके हैं और हम नेक्स्ट वीडियो में 8 चैप्टर से शुरुआत करेंगे। थैंक यू भाई।